Good day all. The question on investors' minds is when, if ever, will the impacts of the coronavirus take toll on the financial markets? Recent estimates show almost 6% of the world's population now under quarantine, 70,000 reported cases, and well over 1,500 deaths that have been reported. China continue to move the goalposts on their reporting figures, which is really troubling some investors and bringing about a bit of ominous mentality for bears who are looking at the equities and looking at gold and bonds and wondering why are the equities, especially the US stocks, running through the graveyard. Last week, where we had the biggest rise in death toll, we saw four out of 5 days US equities print positive results off the back of good domestic data. However, what we have seen in recent times is people flock to the US dollar as well as US equities in light of a safe haven trade. But in reality, we could see a big fall in the market, or the markets be susceptible to a big fall should we get some clearer information on the coronavirus and how it could potentially be impacting a lot of the tech giants who have their bases out in China. Because what we're seeing from China, the information that we're getting, is about 40% of optimal output is being produced within China's operational field. So for example, Apple, Amazon, all having their outputs based out in China, could be experiencing a slowdown over the last few months. Now, turning our heads back to the chart here, 36% increase in the Nasdaq year to date, 21% in the S&P 500, and 14% in the Dow Jones. These somewhat could be seen as inflated figures, whereas the death toll as well as the reported cases of the coronavirus continue to increase, and we do get more transparency in regards to how this is impacting the US key players, the US stocks, blue chip companies, as well as potential impacts on China's macroeconomic growth, we could potentially see investors come and hit the sell button on their US stocks, well overdue perhaps in some people's eyes, in what's seen as an inflated bubble. How long can this rally continue? That is the question on investors' minds. Nasdaq currently printing 9,700 with potential to move higher given the current environment. However, if information does come out and we do see a slowdown in China and we do see poor earnings in the tech giants, we could use our moving averages here to possibly predict how far it could go. Currently, the 50-day moving average sits at 8,000, just above 8,000, which was only the prices from October 2019. So potentially all of this year's gains. Now, we turn our eyes to gold, which during a crisis or a geopolitical crisis usually gets an uptick. Now, the initial reaction to the coronavirus outbreak saw gold hit 1611, the highest level this year, the highest level in about 7 or 8 years. Now we're talking going back all the way to the financial crisis of 2008, where we saw gold hit 1,900, just shy of $2,000 an ounce. So we could potentially see, given this scenario playing out, a move past 1611, where there is a strong wick here to be filled from that level at 1611, strong reversal. Markets have been trying to slowly battle its way up since that time. So these are key markets to keep an eye on, especially with the Fed looking at possibly changing their stance for interest rate policies. Key meeting this week could further be a catalyst for investors to hit their sell button imminently, perhaps. Well overdue, some would say. A market correction. We've seen year after year after year of market gains going through Donald Trump's reign. A lot of positive momentum. US stocks are where you want to park your money. US dollar is where you want to park your money. Positive yields, positive yields. Gold not paying out much of a yield. Perhaps that's the reason we're seeing this sideways consolidation. So what we want to be keeping our eyes on over the coming weeks is whether or not gold reacts, whether or not the US stocks react. Nasdaq here behind me again. And what's going to be the catalyst of that? Federal Reserve meeting, but also more importantly is transparency of information from China. Will we ever get it? Will China want to release the actual death toll figures, the actual cases figures? This could take a huge toll on investor sentiment around the globe. Remember, when China catches a cold, the rest of the world pretty much sneezes. So it's a common analogy in the market. You want to keep your eyes on these key assets and be very wary if you're holding longs in US stocks. Things to consider, and potentially looking to hedge out your risk with some gold over there. So eyes on these markets. Hope you enjoyed this brief analysis. Trade safe. Here from BlackBull Markets, we wish you the best.